All right, ready to dive in. We've got a fascinating company to explore today, Neogen Chemicals Ltd. They're based in India, and they're making some serious moves in the specialty chemicals world.
Specialty chemicals and more, it seems.
Right. And we've got a whole stack of documents to help us understand what they're up to. Financial reports, a press release, even an earnings presentation.
The investor's dream package.
Exactly.
Hmm.
So let's dig in and see what we can uncover. First things first, their numbers are pretty impressive. I mean, just looking at this press release, their year-over-year revenue is up by 22%. EBITDA is up a whopping 71%, and their profit after tax, get this, it's skyrocketed by 844%.
Yeah, the chairman actually called it a robust recovery. And looking at these numbers, it's hard to disagree. But there's always more to the story, right?
Always.
That massive pat jump, for instance, it's not just about a strong performance this year, it's also about comparing it to the previous year when they had some unusual expenses that kind of dragged down their profits.
So it's a bit of a bounce back effect then.
Uh,
But still, those numbers are nothing to scoff at.
Definitely not.
And speaking of interesting numbers, we can't ignore the elephant in the room. Or maybe I should say ION, Neogen Ionics, their battery materials subsidiary. It seems to be both a star performer and a bit of a puzzle in these financial reports.
It's the wild card, for sure. Huge potential, definitely. But it's also causing some increased depreciation and interest expenses in the consolidated financials right now.
It's like a high-growth startup within a mature company. It
Mm.
needs that fuel to grow, right?
Exactly.
So what's fueling Neogen's success overall, besides this intriguing but still developing subsidiary? I noticed they acquired a company called Booley Chem recently. Looks like it's already contributing significantly to their revenue.
It is.
And get this, Neogen Ionics has already started exporting lithium salts. Is that as big a deal as it sounds?
Oh, it's huge. It tells us a lot about Neogen's strategy. They've been very smart about diversifying, moving beyond their traditional focus on agrochemicals, which, by the way, the press release tells us, has been facing a bit of a slowdown. They're pushing into new sectors, semiconductors, for one.
Makes sense. Don't put all your eggs in one basket.
Exactly. And even get this, flavors and fragrances.
Wow, really? I wouldn't have guessed that. So diversification is their secret weapon.
It's a big part of their success, definitely. It shows adaptability. They're not relying on just one market or one product.
In that lithium salt export news, that's not just dipping their toes in the water. That's a full-on cannonball into the battery materials market.
You got it. And with the battery market poised for such explosive growth, that early mover advantage could be incredibly valuable.
Okay, you've definitely piqued my curiosity about this battery market. What makes it so special? Why is everyone, including Neogen, betting so big on it?
Think electric vehicles. Think renewable energy storage. The demand for lithium-ion batteries is skyrocketing globally.
Right, and India's not just watching from the sidelines.
Not at all. They're right in the thick of it. The Indian government is pushing hard for local battery manufacturing. They've even got incentives in place, like the PLI scheme. It's creating this perfect storm of opportunity for companies like Neogen.
So what we're seeing is Neogen positioning themselves to be a major player in this battery technology future. And they're doing it right in their own backyard.
Exactly. And they're not just along for the ride, they're aiming to be in the driver's seat.
Well, they've definitely set some ambitious goals. A revenue target of Rs 951,000 crore for their standalone business in FY26, that massive greenfield facility for battery materials they're building in Dahej, set to open in the second half of FY26. And those long-term contracts for electrolyte supply they're discussing with battery manufacturers, is this all just hype? Or are they really onto something big here?
I think they're putting their money where their mouth is. And remember, all of this is happening against the backdrop of a global shift in the battery supply chain. Countries are looking to reduce their reliance on China, and India is emerging as a real contender.
So Neogen's success could be a win, not just for the company, but for India's ambitions in the EV and renewable energy space. That's a pretty compelling narrative. But before we get too carried away with the future, let's take a step back. What makes Neogen stand out? Beyond these exciting growth prospects, I mean.
It's a good point. It's easy to get swept up in the hype. But solid fundamentals are crucial. And that's where Neogen's history and experience come in. They've been around for over 30 years.
Wow, so they've seen a few things.
They have. They've got a seasoned leadership team that's weathered various storms in the past. That kind of resilience is invaluable.
And it's not just about surviving, right? They've got that 93-member R&D team driving innovation. They're not just riding the current wave, they're looking ahead to the next one.
Absolutely. And let's not forget their focus on sustainability and CSR initiatives. In today's world, those ESG factors are more important than ever. Investors are paying attention.
It's not just about profits anymore. It's about purpose and responsible growth. So we've got a company with a solid track record, a forward-thinking strategy, and a commitment to sustainability. It's a pretty potent combination. But I'm curious, how do they actually translate all of that into success in a market as complex and rapidly evolving as battery materials?
That's the million-dollar question. And to answer that, we need to go deeper. We need to look at the specifics of their operations, their competitive landscape, the challenges they might face. That's where the real detective work begins.
Sounds like we've got our work cut out for us. Let's grab our magnifying glasses and dive into part 2. Okay, detective hats on, right? We're back for part 2 of our Neogen Chemicals deep dive, ready to get into the nitty-gritty of their Q3 FY25 financials.
Time to put those numbers under the microscope, see what they reveal.
Let's start with the standalone financials, just focusing on Neogen's core business. Setting Neogen Ionics aside for a moment, their standalone revenue for the quarter. A solid Rs, 200.41 crore.
A healthy jump from the Rs. 164.47 crore they reported same quarter last year. That's over 22% growth. They're not just holding their own.
Gaining ground.
Yeah, gaining ground.
What do you think is giving them that edge?
Well, that Bully Chem acquisition is definitely paying off, contributing significantly to that revenue growth, but it's not just about size, It's about strategy. Neogen's been really clever about diversifying that product portfolio, moving into new sectors, semiconductors, for example.
So they're not putting all their eggs in one basket.
Exactly. And even get this, flavors and fragrances.
Flavors and fragrances.
Yeah.
Wow, so they're playing a smart game of offense and defense, making sure they're not vulnerable to those fluctuations in any one market.
You got it.
That's impressive foresight. But revenue is just one piece of the puzzle.
Yeah.
What about profitability? Did they manage to turn that revenue growth into actual profit?
Oh, absolutely. Their EBITDA for the quarter was Rs 37.7 crore, a whopping 72% increase year over year. And their EBITDA margin expanded significantly from 13.3% in Q3 FY24 to 18.8% in Q3 FY25.
Hold on. For those of us who don't speak fluent finance, break that down for us. What does that margin expansion actually tell us?
Essentially, it means that for every rupee of revenue they generated, they were able to keep a larger portion as profit. Indicates improved operational efficiency. They're managing their costs effectively while scaling up. It also suggests they're benefiting from what's known as operating leverage.
Operating leverage. That sounds complicated.
No, it's a pretty simple concept, actually. As a company grows and produces more, its fixed costs, things like rent, equipment, those get spread out over a larger revenue base, so each additional unit sold contributes more to profit. Neogen's clearly demonstrating this principle in action.
Okay, that makes sense. So they're growing, they're efficient. But let's get to the bottom line, literally. What about their profit after tax?
Now, this is where things get exciting. Their standalone P8 for the quarter shot up by an incredible 540% to reach Rs 14.41 crore. Now, this is partly due to their strong operating performance, but also because the previous year's Q3 was impacted by those one-time expenses, remember?
Right.
So it's a bit of an apples to oranges comparison, but still a phenomenal result.
So the standalone financials are painting a pretty rosy picture. But now let's add Neogen Ionics back into the mix. Look at those consolidated numbers. Did they tell the same story?
The consolidated picture is a bit more nuanced. While revenue grew by a similar 22% to reach Rs 201.4 crore, the EBITDA growth was a more moderate 71%, coming in at Rs 34.6 crore. And this is where the impact of those early-stage investments in Neogen Ionics becomes a little more apparent.
Right, those increased depreciation and interest expenses they're incurring as they build out their battery materials capacity. It's a bit of a trade-off, short-term costs for long-term potential.
Exactly. It's a common pattern you see with companies that are aggressively investing in future growth. It takes time for those investments to translate into profits. But even looking at the consolidated PITI, which came in at Rs 10.01 crore, an 844% increase year over year, it's clear that even with those added expenses, Neogen is still delivering remarkable results.
So for our listener who might be thinking, okay, that's a lot of numbers, what does it all actually mean? What's the key takeaway here?
Neogen is proving they can walk and chew gum at the same time. They're successfully managing a profitable core business while making these bold bets on the future, particularly in that high-growth battery materials space. That strategic balance is rare and incredibly valuable.
I'm curious, you mentioned that Neogen Ionics is still in its early stages. What are some of the key things happening over there? How are they preparing for this battery boom everyone keeps talking about?
They're focusing on two key areas, lithium electrolyte salts and electrolytes. They've already commissioned 200 MTPA, that's metric tons per annum capacity for lithium electrolyte salts and additives, and they've commenced trial production for the remaining 200 MTPA. For electrolytes, they've commissioned a 200 MT plant at their Dahej facility and even started trial supplies to 4 customers.
Wow, so they're not wasting any time. It's like they're laying the groundwork for a massive launch. And speaking of massive, we can't forget about that huge greenfield facility they're building in Dahej.
Right, the Pakajan project. That's where things get really interesting. They're planning a massive 32,000 MTPA capacity for electrolyte and 5,500 MTPA for lithium electrolyte salts and additives. To put that in perspective, that's a gigantic leap from their current capacity. They're clearly aiming to become a major player in the battery materials market.
That's a serious statement of intent. But these kinds of ambitious projects don't come cheap. How are they funding this expansion?
They've secured Rs 1,500 crore in capex, primarily through project finance debt with a long-term tenure of 10 years, including a moratorium component. This means they have a pretty comfortable repayment schedule, giving them time to ramp up production and generate revenue before those big payments kick in. They've already deployed Rs 419 crore as of Q3 FY25, so they're putting their money where their mouth is.
It's impressive how quickly they're moving. They're not just building capacity, they're already engaging with potential customers. They mentioned those discussions for long-term contracts with battery manufacturers for electrolyte supply, right?
Absolutely. Smart move, too. Securing those long-term contracts early on, it ensures a steady stream of revenue once their new facilities are up and running. They're essentially locking in their future success.
And it all ties back to that global shift away from China in the battery supply chain. Neogen is perfectly positioned to capitalize on that trend.
You got it. They're seeing strong demand for Indian supply of lithium salts and electrolytes, driven by things like geographical de-risking, compliance with international government policies. Companies are realizing that relying solely on China for those critical materials, well, it's a risky strategy, and Neogen is offering a viable alternative.
It's fascinating how Neogen has managed to transform itself. From a company focused on bromine-based chemicals to one at the forefront of cutting-edge battery technology. Speaks volumes about their vision and adaptability.
It's a remarkable journey, highlights the importance of staying agile, embracing new opportunities.
And their journey is far from over. There's so much more to explore, especially when it comes to their future prospects and the challenges they might face in this dynamic market.
Indeed. In Part 3, we'll shift our focus to the future, analyze their long-term strategy, their competitive landscape, and what it all means for investors, and for India's ambitions in the electric vehicle and renewable energy space.
Buckle up for the final leg of our Neogen deep dive. All right, welcome back. It's the final part of our Neogen Chemicals deep dive. We've covered a lot of ground: financials, strategic moves, their big leap into battery materials. Now it's time to look ahead. What does the road ahead look like for Neogen?
Yeah, the future. Always a bit of a mystery, isn't it? But they've given us some clues.
They have. Remember that FY26 revenue guidance? Rs 951,000 crore for their standalone business. That's a pretty ambitious target.
It is ambitious, but they've never been shy about their goals, have they?
No, not at all. And with their track record, the momentum they've built, it doesn't sound completely out of reach.
I agree.
They've got this knack for navigating challenges, finding ways to grow, even when things get tough.
Adaptability, that's one of their biggest strengths. And it's crucial in an industry like this. Specialty chemicals, it's constantly changing.
Absolutely. But Neogen Ionics, that's the wild card. Once that greenfield facility is up and running.
Yeah, that's when things could get really interesting. Explosive growth potential there.
They're already talking about those long-term contracts with battery manufacturers, strategic hirings, capitalizing on that global shift away from China in the battery supply chain. It's like they're setting the stage for a major disruption.
It does feel that way.
But what about the potential risks, the challenges? The battery materials market, it's still relatively young, right? There's bound to be some bumps along the way.
You're right. It's never a straight line to success. One of the big challenges they'll face, price volatility of lithium.
Ah, of course.
Key ingredient in batteries. And its price can fluctuate wildly. Securing a stable and affordable supply of those raw materials, that's going to be essential.
So it's not just about building factories and signing contracts. It's about understanding that global supply chain, managing all the complexities. Sounds like a pretty daunting task.
It is. But Neogen seems to be approaching it the right way. Clear-eyed view, you know?
Yeah.
They're aware of those challenges, and they're taking steps to mitigate them.
Like what?
Investing heavily in R&D, for one, developing those more efficient, cost-effective battery technologies.
Staying ahead of the curve.
Exactly. And they're exploring partnerships with key players in the supply chain to secure that access to raw materials.
So not putting all their eggs in one basket.
Exactly.
Smart strategy, especially in a market that's still taking shape.
Hmm.
But let's not forget their leadership team. All that experience, they've guided the company through so much already, right? Different economic cycles, industry shifts.
Like they've seen it all.
They have the knowledge, the connections, the vision to navigate these uncharted waters.
I think so, yeah.
The commitment to sustainability,
Yeah.
those CSR initiatives, that's another thing that sets them apart.
Yeah.
It shows they're thinking long term.
It does. Those ESG factors, they're becoming more and more important for investors.
Absolutely. Investors want to see responsible companies contributing to a sustainable future. Neogen's ahead of the curve there.
They are.
It's clear, Neogen, they're more than just a specialty chemicals company. They're becoming a real force in the battery technology space.
They are.
And that's important not just for them, but for India. Their ambitions to become a global leader in electric vehicles and renewable energy.
Absolutely. It's a powerful story. Transformation, innovation, and it's just getting started.
So as we wrap up this deep dive, what's the one key takeaway you want our listener to walk away with?
I think it's this. Neogen Chemicals, they embody ambition, adaptability, responsibility. They're not afraid to embrace new challenges, push boundaries, contribute to a more sustainable future.
Well said. And for our listeners, we encourage you to keep exploring Neogen's journey. Keep an eye on their progress, delve deeper into their strategies, consider the broader implications of their work in the battery materials market.
It's a fascinating story to follow.
Because the future, it's being shaped right now. And companies like Neogen, they're leading the charge. Thanks for joining us on this deep dive.
It's been a pleasure.